Welcome, everybody. I'm Alec with NCS, and joining me today is Mark Grismala. Mark, thanks for being here. Please introduce yourself to the listeners, who you are, where you come from, and the expertise you're going to be giving us on this podcast.
Sure. Good afternoon, Alec. Again, my name is Mark Grismala, and it's a pleasure to be here too with you as well. I'm an attorney. I have a law firm, Grismala Law Offices, based in Skokie, Illinois. We're just north of Chicago. Our main focus is in construction litigation, construction law, representing a lot of mostly subcontractors, material suppliers, the occasional smaller general contractor, developer. But we really work hard to helping subcontractors getting paid for their hard work. We help them, with lien claims, bond claims, if there's defect issues or design issues. And as we'll discuss today, sometimes we help them draft contracts and negotiate contracts so they can prevent problems from occurring later. I've been practicing for this year is going to be about 25 years. And pretty much most of my career, I have been practicing commercial litigation. So I've seen a lot. I think I know a lot. I've got a pretty good handle on things here. So, and that's who I am.
Yeah, no, we appreciate that. And for the listeners, this is a little bit outside of our normal type of formatting. Typically we're the experts giving knowledge on either construction or UCC or collection type matters, but I think it's time for us to broaden our horizons and talk to folks like yourself who have expertise in specific areas in which, we tangentially touch on. But I think the more specific nature of this will surely shed some light to hopefully some of our listeners that have run into some of these situations before. So the topic today is going to be escalation clauses, what they are, why they matter, and we'll even share an example later on. But so, Mark, let's kick things off. Let's start at the very, very basic level. What is an escalation clause?
So an escalation clause in a contract, in construction contracts, basically says that, a typical escalation clause will say that in the event that, we have a contract price, but however, in the event that material, energy, or labor prices go up by X percent, like 1%, 2%, 3%, 10%, the owner or the general contractor will absorb that change, and that's a subcontractor. So basically, it's just a way to protect oneself from, increases in materials or from tariffs, actually. So an escalation clause, if negotiated properly, will protect that subcontractor from those changes in prices.
And is that something, and obviously tariff, a very popular topic recently, especially around this time last year. Were you seeing a lot of activity with people missing that from contracts? Again, let's just use last year as a good example, as we had a scare literally in Q1 2025. Is it a normal thing to have in a contract from what you see?
Well, okay, I've had a handful of clients in the past couple of years where material prices gone up, and I basically said, I'm sorry, you're kind of stuck with this. This is the price you agreed to, and we should have talked before and try to get figure out a way to better protect yourself. I'm sorry, what was your last part of your question?
Is it normal to have like this clause in an agreement? Like, is it standard? Is it market, or is it kind of the more sophisticated companies have these types of things?
So before COVID, it wasn't that common, at least among my clients. Sure. But after during COVID, material prices like plywood, drywall, they just lumber shot through the roof. So then when I started meeting with clients, we started adding that provision in there, negotiating that. It wasn't always a successful negotiation, but at least, we made the effort to try and get that in there to offer some protection, some cushion. So since COVID, I think it's a much more, and now with the addition of tariffs, it's a much more important clause, and some of it should be in a contract.
Sure.
You could have done it before COVID as well. Maybe that was a good idea as well, but the issues really came to light with the sharp increase in materials that came out during COVID.
Sure. Yeah. In NCS, we help probably every NAICS code imaginable. So, as you mentioned, lumber was one of those that they came to us immediately and asked for this type of assistance with determining, hey, what can we do here? And a panic at the time, which thankfully has subsided a little bit. But now we live in an environment where we know that these things can rapidly shift so quickly that you kind of need to have your bases covered. So,
and it's not just for big companies; it could be for small. Any company really should have that provision in their contract. Unless it's a short-term contract or something. But anything can happen, and you want to make sure you're protected.
Yeah, absolutely. So, when we say escalation clause. Clauses usually contain somewhere in an agreement. So where does this actually live? Is this in a service agreement, a PO, a more like an MSA type of deal? Where exactly would someone find this or start to implement it if they don't have one today?
All of the above, right? So
Okay.
whatever your contract your contract document could be an estimate, a PO, it could be a written agreement, it could be an email, any like in our typical contract, we put it in there as a provision. If you're a company that doesn't really prepare long form contracts, then put it in your purchase order. Hopefully your purchase order would have a section of terms and conditions, so it would go in there. Estimate too. So that's why it's important to have these terms in your contracts. So
Yeah, and so today, if someone didn't have this, or let's say they're just a smaller company and they're kind of wearing multiple hats, they're owner, they're part legal, and doing all these things, would you consider it an important or maybe critical step to have those sort of provisions in, whether it's a PO contract, the documents that you mentioned? Is it mandatory, at least for them, to kind of protect themselves these days?
well, I mean, I guess mandatory is up to the contractor, but it's strongly recommended, right? And again, whatever the contract document is, whether it's a long form contract, a one-page contract, terms and conditions, PO, estimate, it should be in there to protect the subcontractor, definitely.
Got it. Okay, yeah, and I think that makes sense. And I think a lot of our listeners, probably, especially those in the legal world, are very familiar with this term. But we don't. I apologize. I'm talking in absolutes, but yeah, strongly
Yes,
recommended
not
is
recommended.
definitely
Yes.
the way to go. So
Yeah, I
let's.
mean, if you're a painter, you're going to do paint a house. It's going to take you a month. Maybe that's not something you need to negotiate
Yeah,
necessarily,
fair.
right? So it just depends. But
Yeah, but especially with the raw material suppliers, which again are your
right,
clients, anything in a heavily
right,
commoditized industry,
right,
the fluctuations are just crazy these days.
right.
So let's talk about the current landscape then, as kind of weird getting into that mix and dive a little bit deeper. So what are you seeing today when it comes to escalation clauses on specifically construction related projects? Is that common? Have they been enforced a lot? Obviously tariffs are still kind of top of mind, but I guess walk us through what you're seeing in the marketplace these days.
Well, with the tariffs, they seem to be, not consistent. One day they're proposed, next day, one day they're imposed, and the next day they're withdrawn, next day they were changed. So it's very inconsistent with what's happening with tariffs. But again, the answer is to protect yourself against it, right? As opposed to the other issue with increasing material supplies, they are going increasing materials and supplies rather. Yes, they're increasing, not nearly as a drastic level as like as during COVID, afterward, like things just skyrocketed. But like anything, things are going to increase. So again, the current landscape, it's not static. It's totally dynamic with these issues. So again, that's why these escalation clauses is something that really needs to be negotiated as part of your contract. If you're a subcontractor or GC, you need to put that in there.
And how do general contractors feel about it? I mean, obviously for a subcontractor, it seems like, again, strongly recommended or a no-brainer, I would even call that. But you're putting all the onus on the GC, those above you who may be a little bit more reluctant to accept those terms. Is it
Well,
pretty well
yeah,
accepted, or how does that work?
it's not well accepted, right? It's not. It's something they won't agree to, right? Because why would a
Yeah,
GC
yeah,
want
yeah.
to do more than it has to? However, it's more likely. So if the GC has that provision in its contract with the owner, then there's more of a
Mm,
chance that they would
it's a
accept that
pass
because they're
through or
covered
something.
for that, right? But if
Yeah,
the
yeah.
GC doesn't have that, keep in mind escalation is called like a risk shifting provision, right? It takes
Yeah,
the risk away
totally.
from the sub, places it to the GC. GC might not want to take that risk unless you perhaps reduce your price and adjust for that risk. So there's different ways to go about it, but it just, again, I hate that a generic attorney answer, but it depends on the situation. But
I mean,
again,
but it
it's always the best practice is to have it in there if you can, right?
definitely. And so then I know your expertise is more on in the NCS world, the bottom of the pyramid, so the raw material suppliers and subcontractors. But if you have any kind of insight into the GC world, is this something that they're commonly including with the owner to try to, again, maybe get halfway through, like predicting, oh, this negotiation is probably going to come up with a subcontractor. Let me put this in my agreement with the owner already. Any
Yeah,
insight as to that?
of course they want to. There's like a sub, a GC will want to put that in the contract with the owner as well. Whether or not the owner is going to agree, again, it's risk shifting. Now, so now is
Yeah.
like say the prices skyrocket and the GC doesn't have the funds to fund it, then is the owner going to risk the project being stifled or stopped for a bit? it just, again, it depends where the risk wants to go. So GCs, of course, want to negotiate that and put that in their agreements. And then especially not just for themselves, if they have that escalation provision, then they can protect their subs with a similar provision in their contracts, right? So I think it's equally as important for subs and for general contractors. Again, it's
Got
up
it.
to the owner ultimately if they're going to accept it. So
Yeah, no, I mean that makes sense. And what was that term out? You said risk shifting. What did you say?
provision, risk
Provision,
shifting,
risk. I like that. That's a
risk
good,
shifting provision. Yeah, sorry.
risk shifting. Yeah, it's a little bit of a tongue twister too.
Yeah.
So we talk about the escalation clause or the risk shifting, and from your clients, I'm sure you're getting a lot of data points as to why is this happening. Obviously, tariffs and pricing is one thing, but are there any other kind of macroeconomic or external variables, maybe outside of your clients, that are maybe controlling this market to create a need to have these types of provisions in a contract?
I mean, as far as I know, again, it's just inflation, cost of materials, and then tariffs. But I macroeconomically, I really can't. I mean, are there some, monopolies, somebody behind the scenes pulling the strings? I don't know. There could be some collusion for price increases, especially like in China. But I've not heard anything about that. I mean, it's just basically, I mean, the tariffs and the just the cost of the raw materials is what's that issue.
Sure. And when again talking about escalation clause, how much of the need of that do you think comes down to maybe just general contract terms, or maybe the unclear scope of the work versus like delays? What if you were to kind of estimate, what are you seeing that's really kind of pushing the needle to have these types of languages in contracts?
I mean, what's pushing it? It's money, right? They, again, risk shifting. The subcontractor or the GC, they don't want to absorb the risk of that increase in the price.
Yeah.
So money is the main motivation. Again, yes, on the owner side or even on the GC side, they also don't want to risk any delays on the project, even though the contract will probably provide for some kind of penalty on delays, but delay damages, but still people want to get the project done. The part of a project is not to litigate it, is to build it and get paid. So I think money is a key factor here on these clauses.
Yeah, always. I mean, in NCS with our services, notices, liens, and whatnot, that's exactly, the larger projects get them the attention to want to be able to do these types of things to make sure that, especially if you have tighter margins on these larger projects, you just can't risk not getting the money in the door. So shifting away from the, I guess, legal framework a little bit, talking more about the operational framework. So when you have your raw material supplier or subcontracting clients come to you, what are the early signs that they say a project is getting strained and they are kind of panicking to either see if they put this in a contract, or maybe they need to put this in there or get basically ready to
Well,
execute on one of these provisions?
well, I mean, if they've already signed the agreement and they see the project is strained, then it's a bit too late.
Sure.
As far as seeing if the project is strained, they'll see that maybe they're, if they're a subcontractor, maybe they'll see their GC is struggling to get paid from the owner. If they're a GC, they'll see the owner struggling to get payment from the lender, right, if there is one. So I just, yeah, I mean, like I said, it might be too late by the time that comes up for the subcontractor. The only thing they can do, and I've told, if a client comes to me and they say, listen, here's our contract, our material prices have gone up, what should we do? The best thing you can do is issue a change order anyways and see if they get approved. I've
Yeah.
had some clients, have had an understanding GC or owner, and they've, been able to negotiate a payment for the escalation and materials, but sometimes they've just been flat out rejected because the contract says what it says. So, kind of stuck with it.
Right. And you kind of hit the key point, and where I want to go next is uh, basically securing yourself. And so with NCS, obviously, we're the industry leader in notices, waivers, liens, and bond claims of the like. So where do those fit into this whole scheme of escalation clauses? Credit monitoring, preliminary notices, documentation, how do those relate?
I mean, I guess credit monitoring could be helpful in that you can monitor if you're a sub, you can monitor the GC and their credit and how they're progressing. You could possibly also, I mean, investigate your material suppliers too, and to talk with them, send them notices and see if they're predicting any increases in material costs, so they can, your contract can be adjusted properly. I mean, there are ways to, I guess, for the sub to shift the risk down lower tiers. Well, they could negotiate, say they have got to order X amount of lumber, they could negotiate a price with their lumber supplier for X amount over a period of time, and then the price could be locked in, right? Another method they could do is, the sub could just start stocking up on lumber, right? Especially those standard pieces like 2x4s or plywood or drywall, and they could just keep that in stock. I mean, there's a risk they might buy too much, but then they're also protect themselves from the risk of those materials going up. So on the flip side, though, if you're a custom fabricator like kitchen cabinets or bathroom cabinets, that's a little bit harder to stock up on, right? You have to
Right.
custom order, but
Yeah, and we
but
saw a lot
like
of.
I said, there's ways. If there's ways to protect yourselves if you already signed the contract, or if the owner or GC don't agree to the escalation provision.
Yeah, no, and that makes a lot of sense. And we saw a lot of stockpiling, during that, again, about a year ago in Q1 of 2025. And some folks made off really well. They were able to get at a price and kind of hedge their way through, and others were sitting on a
Right.
lot of inventory, and there's a lot of liquidation type sales on the back end, once kind of the market came back. So for those listening, I'd imagine they're either experts in this, or perhaps they've never heard of an escalation clause. From a legal perspective, at what point should a company enforce this? Is there, obviously saying a percentage basis is quite difficult given the industry scope, but at what point do they know, okay, we have this in our contract, we're seeing prices rise? When do they actually do something about it?
I mean, I guess the easy answer is if there's you're working on a project, there's an increase in materials and it eats into your profit, right? That you're not, because I've had clients too who are like, listen, I'm not going to make any money on this project now, and unfortunately you're stuck with the price. So that's when, so basically in these escalation clauses, we do have a percent, the ones we use with our clients, we do have a percentage in there saying like if they increase by more than 3%, then, the owner of the GC has to pay that. And that's including like, labor, material, equipment, or energy, because energy is, sometimes, electricity or whatnot used to help work on the project. So, and that'll increase the contract total. So.
Got it. And I guess wrapping up just with one final question, if you had one piece of advice for companies facing constant market pressures from a pricing perspective, whether you mentioned it's tariff related, if they're in a monopoly or an oligopoly type of industry, but what would one piece of advice be to make sure that they're putting themselves in the best position to, hedge against this sort of risk?
I mean, the best advice is to call an attorney right away. I mean, not right away, but before you sign the contract, to have them review it, negotiate it. Because then once that's signed, it's too late then, right? And then unfortunately, our clients do come to us when it's too late, and there's very little we can do at that point. But if you come to us beforehand, then we could negotiate the contract, negotiate the terms, and better protect the subcontractor, the GC representing, and shift the risk away from them towards and make it towards higher upstream.
Got it. And I had one more question that came to my mind. And before we wrap up, so we just talked about, what's uh, practical vision of this. But if there is one thing that, a new client comes to you and you're advising them on how to do these types of things, what's one piece of advice that you would give them prior to kind of set themselves up for success again when it comes to escalation clauses?
I guess a good piece of advice is to be familiarize yourself with the industry and look at the trends. If you're in construction, you can see where things are going. You could talk to your other colleagues, talk to other competitors. I'm a member of an organization called ACA Chicago, which is a group of commercial subcontractors, and that's an issue we talk about frequently at our meetings or networking events. Even it's a pretty heated topic, and then if you participate even in those types of organizations, you get a better feel as to what's increasing. Like maybe plumbing pipes are not, but then like we said before, lumber is skyrocketing, right? So you get a better feel and see what kind of protection that you need. So I guess knowledge is the key here.
Yeah, and that's actually perfect advice. I'd say if the credit industry specifically for construction does anything well, among other things, they're very good at networking. There's a lot of great credit associations out there, and
Yeah.
NCS tries to kind of tie all those together with informational podcasts and webinars, again, such as this. So, Mark, I really appreciate your time. Thank you for joining us. I'm so happy we're able to kind of, again, branch out and talk to an expert like yourself, and looking forward to having you on the next one.
Sure. Take care. Nice talking to you,
Thanks,
Alan.
Mark.
Thanks. Bye.